So, the first trading day of 2026 for the Indian stock market, what a roller coaster, right? The headlines were all over the place, but what was the real story behind all that drama? Let's peel back the layers and see what was actually going on. I mean, if you just glanced the headlines on January 1st, you'd think the market was either having a total meltdown or the party of the century. You saw words like shocking, flat, blasts, all designed to paint this picture of absolute chaos.
All right, so let's cut through all of that noise. We're gonna get past the hype, look beyond the frenzy, and figure out what the market was really telling us on day one.
So what was the big picture here? After all that headline noise, if you had to boil down the entire market's performance into a single word, you know what that word would be? Flat.
And that really is the crucial takeaway. It's not that nothing happened. Oh no. Underneath that seemingly calm surface, there was a real battle going on. But from the outside, the market barely made a ripple. No big boom, no big bust.
So let's get into the numbers. When you take a closer look at the main indices, you can really see that push and pull that kept everything so perfectly balanced. And this is where you can see the day's split personality on full display. The Sensex kicked things off with a bang, surging 200 points, but by the closing bell, it completely fizzled out and actually ended in the red. The Nifty, on the other hand, was the picture of calm. It barely budged, a true tale of two markets.
Okay, so if the main indices were flat, where did all that crazy action in the headlines come from? It came from this fierce tug of war between individual stocks, all pulling the market in opposite directions.
In one corner of the ring, you had the winners, steel and energy. I mean, these stocks were absolutely on fire, with JSW Steel just rocketing up nearly 5%. It was a massive day for metals.
And in the other corner, the losers.
You see, for every soaring metal stock, an IT stock was getting hammered. Heavyweights like TCS and Tech Mahindra were dragging the market right back down, creating that perfect and, let's be honest, kind of frustrating balance. Now let's zoom out from those individual stocks and look at the entire sectors. That's when you can see these battle lines drawn even more clearly.
This chart really says it all, doesn't it? The power coming from the metals and banking sectors was almost perfectly canceled out by the drag from IT. And the realty sector? It just sat there, going nowhere, a perfect stalemate. So what does this all mean for the days and weeks ahead? Let's dig into the clues from the source analysis and see what we should be watching for. This is the big question on every single investor's mind. Does this mixed signal point to a choppy, uncertain year? Or is this just the quiet before a major move? According to the analysis, the big takeaway isn't to bet on the whole market, but to get really focused on specific themes. First, watch for the Nifty to potentially break out above that key 26,350 level. Second, the PSU theme, that's public sector undertakings, so government-owned companies, is being flagged as a major trend to watch this year. And finally, that strength we saw in metals, that looks set to continue. So, the first trading day of 2026 gave us a perfect picture of indecision. It has definitely set the stage for a fascinating year, but it leaves us with one massive question. In this market tug of war, which side is finally going to pull the other over the line?